Tracy's questions. What about after the litigation and you are the party who win the case, so you receive award, right? And depends. Okay, generally speaking, award, okay, from the judgment, it is income, but exception, okay, right? Every time we learn general rule, we know all this is income, but more importantly, learn what's exclusion. Exception is if this award is from your bodily injury. Bodily injury. From your work, from accident, from whatsoever. If this award is from the bodily injury or related to bodily injury, okay, and it's like medical, right? Your body, the pain.
Including pain and suffering.
Yeah, pain and suffering, that is tax-free. You suffer something, but we don't know how much value for the suffering, right? That depends on the jury. But everything the award received because of the bodily, physically, medical, that kind of thing is tax-free. However, if you have bodily injury from the work, and the compensation is not only for your injury, but compensate your income loss. Compensation for income loss is taxable. Understand?
Yeah, my question is, if actually the award is recover your previous loss, you still need to pay tax?
Yes. You got the point.
Cover loss.
Right. So let's just go back to the general rule. Okay. Every penny you receive is your income. However, exception is if this compensation or award is from your bodily injury, including physical or mentally or emotionally, that's tax-free. However, if this compensation, portion of this compensation, cover your income loss, because you have body injury, you cannot go to the work for 2 weeks, and the insurance cover your 2 weeks loss because you did not make the salary or wage due to your injury. So insurance company paid you 2 weeks wage loss. That is taxable, of course. Okay. We'll go over that. Very, very good points. So for chapter 3, we will talk about what is income or what is exclusion.
Workman comp. Is that?
Yeah, workman
comp.
right. Yeah, workman compensation, that is tax-free. Generally speaking. Okay, we'll see it. So on my book, not necessarily on your same page, okay, because we use different version. Starting from chapter 3. Okay, so let me see. On my page 82, but not necessarily on your page. The number 1 rule is realization principles. Okay, so my page number is not necessarily your page number. So if you're starting from chapter 3 should be fine. So let me give you one first example. There's one company. There's one ABC company purchased 500 shares of XYZ company stock, $5 per share. By the end of the year, this stock went up to $12. Okay, so purchase at 5. By the end of the year, stock value go to $12. Right? And if ABC company never sold, still holding the stock, do you need to report $7 income? Of course not, right? No, not. Okay, because this is called realization. However, I want to use this example to flag back Eugene's questions. What is the difference between this course and another course for next semester, financial accounting? Okay, when we learn financial accounting, if we go back to the same example, the result may be different. We'll talk about that. Under certain situation, you are ABC company, you are holding XYZ, even though you did not sell stock. However, if the stock go up or go down, you may need to do the adjustment. But right now we are talking about for tax, at least for this course, for tax purposes, you don't need to report it, of course, you're holding. So there's no tax issue here, all right? I believe some of you or most of you will take my financial accounting for next semester. Okay, on my page 85, there's one topic is called tax year. Tax year. We know tax year is 12 months period. Okay? And there are two different, eventually, generally speaking, two different consistencies. For individual, like you and me, usually we starting from January 1st and ending on December 31st. Okay? That is called calendar year. That is calendar year. Or if you are a business entity, okay, corporation, trust, partnership, whatsoever, you have your choice. You have your choice to select tax year. Of course, there's some benefit to that. For this course, okay, we don't have final exam. We don't have final exam. However, your final score, 30%, comes from your final project. Final project, each one of you adopt one topic. For each chapter, I only reserve 3%. Eventually, for each topic, I only hopefully reserve 1% to adopt it. So starting from here, okay, tax year is one topic. I highly invite someone come in to say, hey, I want to take this topic. The sooner you take the topic, the better it is for you, okay, because you have more time to prepare your final project. Your final project is based on your topic. You do the research. We have so many resources. rs.gov is one major, or not limit to it. There's so many resources you can get online. And tax year is huge topic. Okay, I don't want you to study the huge topic. I want you to study on tax year rule for partnership. So the number one topic, anyone would like to adopt it? Again, okay, this topic is called tax year rule. Because if you go to do the research, so many rules to regulate how the partnership can choose. You don't have the freedom. Okay, you are not free. You're not free to choose whatever. Okay. You need to do the research and to tell us, what is a rule. If you form LLC or you form partnership, it's a very, very practical issue because in the future, okay, you may form the LLC or form a partnership with your people, and then at that moment you need to know how can you choose the partnership tax year. So I narrowed down the scope. Okay, so for the topic one here, the topic one is how to choose the tax year for one partnership. Okay. Again, the final product for your final project is around 12 minutes. Around, not more than 15 minutes. Okay. No less than 12 minutes. Okay. Because this topic is so huge. So your final project is about 12 minutes presentation on YouTube. Okay. You post it, and the deadline is the 1 week. 1 week. Okay. After the last course. So you can turn it in next week if you want to, okay? But no later than the 1 week after your last course.
So, this is the tax year, the calendar year, not the fiscal year for your business, right?
No, let me say it again. When we say tax year, you have your choice to follow the calendar year. That is easiest way. But when we say tax year, they include two. They include calendar year and fiscal year. So if you want to choose this topic, you need to, on your final presentation, you say, okay, my partnership would like to accept calendar year, but it's not ending yet. Because there's only one of the choice, right? Then you need to follow that. My partnership also can choose fiscal year as the following. And this is a rule. Okay, this is a regulation posted by RS. You cannot choose your fiscal year freely. You have the regulation. You have your, you understand? So if you choose this topic, you need to cover 他已经坐在那边，他已经有位置，是，你可以跟他一起去做。首先有摄影机。So when we talk about the tax year, you need to cover two, okay? Calendar year, but never finish there, okay? Because calendar is just too easy. Again, if you choose calendar, you need to tell me why. Why? Okay. Then you need to follow up. You need to go deeper. What is the rule applied to the partnership if you choose fiscal year? So any volunteer for this topic? We have one already, huh? I only limit one person to it. So let me see. Name? Joyce, right? So that is tax year. Okay, don't worry about that. I'll give you a lot of opportunity. Okay. So don't fight. Okay.
What is LLC? What is the difference? of
LLC and
LLC
partnership.
and
LLC and partnership. LLC and partnership.